Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, October the 4th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Absolutely no economic data today here in the United States. We did get a couple of things out of Japan. Consumer confidence slightly higher than expected. We got construction PMI in Great Britain, which was 52.3, expected to be 49.1. So keep in mind that the PMI, Purchasing Managers Index, anything above 50 is expansion, anything below 50 is contraction in the economy. They were expecting a bit of contraction there in the construction side of the Purchasing Managers Index. Surprise to the upside. Good for that economy there. We also got the PMI month over month for Europe, and it came in at negative 0.2%, was expected to be unchanged for the most part. So those economic data points pretty decent across the board. The overall markets are kind of really all over the place. Not a huge range, but we are seeing just back and forth volatility across the board. Here in crude oil, it's pushing higher at 48.93, was into the 49 handle a little bit earlier, but up 12 cents on the day and above this Fibonacci level that I've been talking so much about. Got above that yesterday, settled there today. The bulls are defending that line in the sand. Then on to gold. Gold having a huge down day, down over, what is that now, over 30 some points, right down to the 200 moving average. That should act as support for that. I've been talking about this looking like it was going to act as support. It broke through that today and just straight through the 1300 level. That was again going to act as possible support for the psychological level. We have blasted through that, down 34 points on the day, and it's unrelenting for the most part to the downside. Then we got bonds also pushing lower. Looks like it's going to want to go to this point of control, the value area where the most time and volume has been spent. That's the next target for it. It just happens to coincide with that 200-day moving average. Again, today, this 38% Fibonacci level just acted as no support as the overall market just blasted through there. Then on to the Dow Jones. As you can see, this is a pretty tight market. Dow Jones just down 25 points on the day, but right in between the 9-day exponential moving average and the 50-day moving average as well. So it's right in there. The bulls and the bears fighting it out. Now, the longer this starts trending down, the more bearish it's going to look. As soon as I talked about this crossover happening, that was where the bulls were looking to take control, and it becomes more bearish in trend. Onto the NASDAQ, just down 1 point on the day, really unchanged for all intents and purposes. As you can see, it's just it's still in that upward trend. So if you are a bull, there's nothing really to worry about so far. With this gold sell-off, the bond sell-off, that should give lift to the equities. In the E-mini S&Ps, they're leading the way, I guess, if you will, in percentage terms, but only down 4 points on the day. Again, right there in line with the that 50-day moving average acting as a bit of support. This is what I really wanted to get down to. If you want to look at some intraday volatility, if you will, we're only down 4 points, but we've seen massive ranges. This morning, right off the open, for the most part, we rallied up, tried to test the overnight highs, but the market turned around, slammed down. So if you look at this, we basically went from 21.56 down to 21.48, so close to a 10-point sell-off. And then the next 30 minutes, we got a 10-point rally. And then the next 15 minutes after that, it was a 10-point sell-off. It was just whipsawing back and forth, and that's what it's really done throughout the day. Even on this candle, 15-minute chart, we basically rallied from 2148, which is looking like a nice little support area, all the way up to 2158. So that was in one 15-minute bar. The market is just flying all around as it's trying to discern what direction it wants to go. Right now, negative, but at the end of the day, it's pretty much unchanged. And despite all this volatility, it is pretty much an inside day, except for this little breakout below yesterday's low. Pretty much an inside day. And these are the kind of markets that I'm going to kind of wait to see if it has any direction. I haven't added anything onto my portfolio today or taken anything off. I'm just kind of in a wait and see mode. I'm going to probably have to look to defend my gold strangle. It's broken or GDXJ, which is the gold miner index ETF. It has all of the smaller gold miners in it. It's not the big ones, but GDXJ has broken below and tested my puts. We've just broken below that, as you can see here. My puts I'm short are at 40, looking for it to stay within this range. I'm going to be touch and go on that. It's tested my my puts, but I'm keeping my powder dry. I'm going to keep my eye on it. Remember, when we're tested on those puts, it's you can check out my Pro Trader Strategies hacks on that. Talk about the probabilities of being tested on that. Obviously, those probabilities are coming to fruition right now, but that doesn't say that I don't need to be a little bit mechanical and stay diligent on defending that. So I might be rolling those calls down, collecting a little bit more credit for that to increase my break even to the downside. So, or lower my break even in a sense where it can go a little bit further and I'll still be above my break even. So I'm going to be looking at that going forward today. That's about all I got for you guys. I'm not doing a whole lot else other than watching this gold trade and keeping an eye on that, because that's going to be the one I need to defend. All right, that's all I got for you today. If you can't take that, take it easy.